And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. It's great to have you share your morning with us. Let's take a look at what's in the news this morning. Now, we see it appears more money is expected into the federal coffers as the government says it plans to recover about 553 billion naira in unremitted taxes owed by international petroleum shipping companies operating in Nigeria. Director at the Federal Inland Revenue Service, Mr. Abdullahi Aliyu, says that recouping the sum, which accrued from 2010 to 2019, would help address the nation's budget deficit. He explained that unremitted taxes could be an alternative to addressing Nigeria's economic woes instead of borrowing. Now let's flip over to oil markets. Now we see oil prices slipped in Asian trade today as fears of a sluggish demand recovery in the world's top crude importer, China, offset prospect of a tighter supply, with top exporters Saudi Arabia and Russia cutting output. Brent crude futures dipped 21 cents to $76.44 a barrel after settling higher 0.5% in the previous trading session. U.S. WTI crude that fell about 4 cents after closing 2.9% higher in the post-holiday trade yesterday to catch up with Brent's gains earlier in the week. So we're still seeing a lot of volatility in that market. To the global grains market now, we see Chicago wheat slid today as the market took a breather after the previous session's strong gains, although the decline was limited by concerns over U.S. yields and adverse weather in some of the key exporting countries. See, corn gained grounds on worries about dryness in parts of U.S. Midwest, while soybeans ticked higher. Wheat jumped more than 5% yesterday after the U.S. Department of Agriculture said just 37% of the winter crop harvested as of Sunday versus 52%. That was about 52% last year. The agency also unexpectedly cut its spring wheat ratings as rains failed to improve conditions. And away from the grains market, now the president has declared his support for the implementation of a $5 billion floating liquefied natural gas project in Nigeria that has a capacity to provide 7,000 jobs in the country. The president gave the backing when he received a group of joint venture partners, including UTM, FLNG, Technip Energies, and JGC Corporation in his office, alongside ambassadors of France and Japan to Nigeria. Our State House correspondent, Gloria Mezeke, reports.
Weeks after President Bola Tinubu put a halt to the removal of fuel subsidy in the country, attention is apparently zeroed in on gas for succor and as a sustainable energy divergence. It is for this reason that the president began his day by receiving investors from the natural and petroleum gas sectors in the State House.
Please.
The investors, accompanied by the ambassador of France and deputy ambassador of Japan to Nigeria, wanted the president's backing for a floating liquefied natural gas plant, which could crash the cost of gas in the country.
Are you guys good?
The president, according to a statement released by the presidential spokesperson, Mr. Dele Alaki, says when the facility gets upstream by the fourth quarter of 2026, it would process 1.5 million metric tons of liquefied natural gas for foreign market and produce 300,000 metric tons of liquefied petroleum gas, LPG, for domestic use. The investors reaffirmed their commitment to help Nigeria shore up her liquefied petroleum gas production capacity.
We've signed a $5 billion with Afreximbank for multiple floating LNG projects. Afreximbank is working on the financials and is aggregating both the debt and equity for this project. This project alone will deliver 25% of the requirement of LPG in country Nigeria. On the part of job creation, this project has the ability to create 7,000 jobs for Nigeria.
As our colleague explained to you, the floating LNG will be contributed to decarbonization strategy of Nigeria.
The president also received in audience the 9th president of the Nigerian Senate and secretary to the government of the Federation, Senator Ayim Pius Ayim, who was accompanied by the former National Publicity Secretary of the PDP, Mr. Olisa Metu.
Yeah, it was a great honor to pay courtesy on the president, to congratulate him first and foremost for his successful inauguration as the 16th president of Nigeria, and also to encourage and congratulate him on the bold steps he had taken so far. So we had a whole lot of heart-to-heart discussions, but primarily is to congratulate him.
Came to see the president, to commend him for his takeoff, very good takeoff, the policies he has done, his inclusiveness, and most of all to canvass for the idea of participatory governance, participatory democracy.
President Tinubu wrapped up his day with the visit of the APC National Chairman, Senator Abdullahi Adamu, and the party's secretary, Dr. Iyola Omishure, at the State House. This visit comes hours after the National Chairman disowned the list of the principal officers of the 10th National Assembly announced by the President of the Senate, Godswill Akpabio, and Speaker of the House of Representatives, Tajuddin Abbas. From the Presidential Villa, Gloria Umezuke, Channels Television News.
Welcome back. Now to our first conversation. Globally, inflation has been a major headache for central bankers, raising lending rates to tame inflation, increasing lending costs for businesses, and possibility of a recession, looming. And many marketers and budget holders may reach for a familiar playbook that's cutting advertising budgets and laying off, marketing staff to protect margins. But is that the right move? Let's talk to Mr. Steve Babayekona, President, Association of Advertising Agencies of Nigeria, and MD, CEO Extreme Ideas, joining us right here in the studio. Great to have you. Good morning.
Thank you, Ladi. Thank you for inviting me.
You're welcome. So these are quite extraordinary times, for businesses. And, when there's a risk of recession, you ask yourself as a business, how do you attract, customers? Do you still continue with your marketing budget, your advertising? Do you still carry on with that, even, at the risk of a recession? What do you think?
Well, I mean, usually the knee-jerk reaction that most companies will have when there's the economy is going south, like we've witnessed, and it's not even just Nigeria, it's a global situation, like you rightly observed, is that knee-jerk reaction is to try to cut advertising budget. And over time, history has shown that that is a big mistake. You need to advertise even in terms of crisis like we have on our hands economically like this, because, and the reason is simple, the brand that is top of mind for consumers in these dire times will be the dominant brand when we come out of it. Because see, economy goes in cycle, right? There's times when it's going to go south, but honestly, once it gets settled down, we hit rock bottom, we're going to move up. And when it moves up, consumers never forget the brand that held their hands in that times, which is why my counsel would be to brand owners and to marketing people, keep the budget
talking
intact.
about, holding hands, what does holding hands entail, through a recession?
It's been engaging with your consumers, talking to them and making them understand that you see reason, being able to add extra value to be able to compensate for the... Look at the economic situation in Nigeria, for instance. How many brands are coming out to identify with the consumers who are struggling now with the rise in the price of petroleum, rise in the price of power and all the other. So consumers brands need to come up with much more innovative ideas that will engage and give extra value to consumers. That's what we should be doing at this point.
And hopefully the consumers don't forget you, remembering that you actually held their hands, through the bad times.
I guarantee
basically.
You, consumers are like the elephant, they never forget.
Right.
Especially for the brands that stood by them in dire times.
And it's definitely been a tough, first half of 2023.
Yeah.
How would you paint a picture? How did the demand for advertising fare, from businesses?
Well, I mean, if you look at it, let's start from the macroeconomy, maybe a modest 2.3% GDP growth in Nigeria in the first half of the year. I think demand for advertising spiked a little bit because of the election. So some advertising agencies were able to do some work for political parties and whatever. But then beyond all of that is that post-COVID period, we are now in the process of recovery. So brands all of the whole distribution channels that collapsed during the COVID period are up and running. So there are a lot of activity. So I said there's a modest upswing in activities in the advertising sector.
And talking about, modest now, we've been through the first half.
Yeah.
Looking towards the second half
Sure.
now, how is it looking? Are there any prospects of more business coming in?
I think the good thing is that we have a new government in place. So the onus is on the new government to begin to put in place macroeconomic policy that will match with the monetary policy, because we saw dissonance in the past between the monetary policy and the fiscal policy, so we need to see a convergence. And I think to give credit to the new president, you see all of that happening. We need to see more of that happening quickly. We hope the new ministers will be in place as quickly as possible. And once that happens, I'm hoping that we'll see a little bit of bounce in the economy of Nigeria, and that will trickle down to the advertising space as well.
And talking about getting that bounce, and attracting, foreign investment, definitely the country needs some kind of facelift,
Absolutely.
some kind of, rebranding. What would you say is the best way to, rebrand Nigeria at this time to be that, top destination for investors globally?
We have to take care of all of the whole problems surrounding this country, the issue of security, and all of those things. You can't rebrand when you have problems. So first we must do a bit of house cleaning, which I'm so confident that this new government will be able to do. Once we do that, then we can begin to talk about rebranding. But before we even rebrand, I think we must talk about the issue of unity. I think that is the biggest situation that we face. I don't think that this country has ever been this divided. So we need to heal all of the wounds, and then we can start talking about rebranding.
Yeah, the elections did open our eyes to
Absolutely.
How divided we
Absolutely.
were. But I hope that post-election we might get back together.
Again, I'll say kudos to the president. I think he's making his body language seems to suggest that he wants all of those things to happen. So we just need to see more of that, and then we'll see how we go from there.
All right, let's look at how our PR industry looks out there. We see earlier this month Nigeria broke a 70-year-old creative jinx.
Yeah.
At the Cannes Festival. Tell us about this. Why did it take 70 years for Nigeria to break that jinx? And what is this jinx?
A foreign journalist asked me the same question in Cannes last week, and I told them it's like asking a country like Netherlands, powerful football nation, how come you've not won the World Cup? In spite of all the appearances in finals. So the jinx we broke was winning the Cannes Lions for Nigeria. So Extreme Ideas, my company, broke that 70-year jinx by winning the first Cannes Lion for Nigeria and for West Africa at the recently concluded Cannes Lions Festival of Creativity. And for me, I'm really excited. It's a big win, not just for the company, but for the entire nation.
Yeah, and talking about the nation, how does this, impact how we are, perceived, out there, the industry?
Ladi, if you were in Cannes this year, they ask you, where are you from? Once you say Nigeria, you are automatically a superstar, because the news of that Nigeria's win was all over. And that's why I'll use this opportunity, again, to reach out to the federal government, the state governor. They must host and celebrate us for this win, because it's not just a win for the advertising industry, it's a win for the country.
Yeah, quite a big one there. And, this sector definitely has, been through a lot, looking at, regulation and all of that. You are the president of that association. What have we seen, so far, in terms of, regulating the industry?
Shout out to ACON. They've made all of the right rules. The former president also signed a new ACON law, bill into law. And so we're seeing a bit of house cleaning. Of course, there's a bit of disagreement between some sectors who don't agree with the law, but the law will take its course, so we'll see how we revisit all of the tough issues that needs to be discussed. But for now, we're happy with the new law, and we're happy that we're making progress.
I remember sometime, content creators were going to start paying, taxes, at some point, all those funny, content creators we see on social media, on Instagram. Sure. How did that work out? Are they paying those taxes?
I think they're in conversation, and they're not even telling them to pay taxes. I think when you advertise, the ACON has the right to regulate advertising. So you can post your content, you're not paying anything, but if you're advertising, then you have a question to answer with ACON.
And it's not easy knowing when... Is it that easy to identify when they're advertising?
Once I say Lady Williams is a good anchor, please patronize Larry Williams of Channels TV. That's advertising.
Right.
And
so
the law is very
when
clear.
when they mask it with comedy and
It
all
doesn't
of that,
matter what you mask it with. Once you are proposing and trying to sell any brand or service to people, you're advertising.
Fantastic.
And the new law of ACON is pretty clear on what
So
advertising
are the
is.
content creators actually...
Well, I think they're in conversation with ACON, so hopefully they will be able to get with the program.
And penalties.
Well, I'm not ACON.
But I'm sure there are going to be penalties.
Of course, there will be penalties.
You know, if they
That's
flaunt
why
those
they are the
rules.
regulator. If they flaunt the rules, then ACON will have to address it.
All right. So what are you seeing for the industry, going forward?
I see progress. I see, having broken the jinx and winning CAN for the first time, I see just more progress. I know this will open door for all the other very creative agencies we have in Nigeria to be able to go and take a shot and win as well. And I'm looking forward to for AAA and my association of Advertising Agencies of Nigeria, collaborating with the federal government to take the rebranding of this country and reposition this country when we think we've done enough of the house cleaning.
Fantastic, because Nigeria is the
giant of Africa.
The giant of Africa.
I mean, in Cannes, I had the flag of Nigeria. We were flying it all over the place, and I feel proud as a Nigerian. I have no other country. I'm proud of my country.
I feel proud now. Thank you so much, Mr. Steve Babeko, President, Association of Advertising Agencies of Nigeria.
Thank you for
and the
having
MD CEO Extreme Ideas. It was great having you today.
Thank you so much for having me. Thank you.
All right, now, after the break, I will take the conversation forward. Take a look at what the FIRS is planning with traders in those markets, how they're going to pay VAT. That's our next conversation. Do stay with us. This is Business Morning. And before we go to the VAT conversation, let's take a look at what's happening with commodities market. Joining me now is Bolanle Agbaje, Senior Analyst, Financial Derivatives Company.
Hi,
great to have you, Bolanle. Good morning.
Thanks for having me.
Yeah, so looking at the global commodities market now, we see that we've had about a 25% slump for most of the commodities in 2023. Mm-hmm. They hit incredible highs in 2022 from oil, natural gas, but they've all come down to reality, even grains too.
Yeah, because,
and this morning we're seeing the same pattern with oil prices. Up yesterday, down today, and it's down today.
I think the major impact of that, or the major reason for that, is the fact that demand is saturated. Demand can only be pushed as much as the income that is available in the economy, and most people are now strapped when it comes to disposable income. So that obviously would have an impact on how much further prices would go up. And obviously last year we had seen, the supply situation where there were supply bottlenecks and all that, and that obviously affected prices and pushed up prices significantly. But this year, the demand situation is already cramping, a high interest rate environment. So individuals within the economies are, feeling the heat, and that obviously is translated into, the price stickiness.
And definitely we still have geopolitics, with us right now, and that was what drove, prices up in 2022.
Yeah.
So I'm wondering, does geopolitics still have that power, in these markets?
Well, it has already been factored into, the prices that we're seeing now. So except something different happens with the political scene, obviously everybody has already priced in the fact that, the war is currently still going on. I don't think people are bothered about it anymore. It's still obviously there lingering, and most economies are looking for solutions around it. But you see a situation where the EU is looking for ways to actually ease out the sanctions on Russia, because they're looking at increasing the supply of the grains, majorly wheat, from that region. So what we can say that the geopolitical scene right now is not necessarily having a negative impact on the prices as we're seeing so far. But
hoping for no escalation.
Hoping for no escalation, because obviously most of these governments are trying to hamp down on these high prices. We're seeing the fact that the high inflation environment is restricting, or creating a situation where you have monetary policies that, tailor or tackle that initial problem. And so far, so good. Most economies are able to, reduce inflation gradually, although Nigeria is still battling, that issue. Many other African countries are actually easing out on their inflation numbers, except for Nigeria at the moment.
Right.
But we do hope, although, you have major agencies like the World Bank that mentioned that they expect our inflation numbers to get to about 25%, and others, obviously less optimistic, are saying about 30%. We don't hope that that happens,
Right.
but all in all, inflation is still very high, and we're still trying to figure out how to bring that down.
Everyone is trying to figure inflation out, this year. But let's look at the domestic commodity prices there. I see tomato prices there about 70,000.
70,000.
27% rise, and pepper.
Yes. So, obviously, with the fuel subsidy removal, that obviously affected transportation costs. That goes across the board for all commodities, but particularly with tomato, we're seeing the tota absoluta pest that is affecting, the supply of tomato at the moment, and that obviously has added to, the stress of, increased cost when it comes to, the output. But this tota absoluta has been a pest that has, affected tomato on and on for the past few years, and to find ways to make sure that this is not the case, obviously it requires investment and technology. Storage, when it comes to storage of harvest that you had gotten in previous months, to make sure that you save that to supply the demand that we're seeing at the moment, whereby the supply of tomato cannot feed that demand. So I guess lack of investment in this commodities market space is what is affecting or making this particular issue, because you always have cases where pests usually affect some of those commodities, because that's just what it is.
Battling pests, that's another issue entirely there, because most of the insecticides and pesticides used also kind of harm. They
harm consumers, so there's only so much that they can do. But I'm sure to get the particular pesticides that will be tailored to that kind of infestation would obviously be more expensive. And I'm sure that's not what they're using at the moment, because everybody's trying to save costs. So going forward, looking for ways to make sure that this kind of issue...
The cheaper pesticides are normally harmful.
Well,
majorly, there's a risk of it being harmful.
Well, I'm not sure about the research on that, or the specific details about the different kind of pesticides. But when it comes to it, would make sense that the ones that definitely kill all these pests would be way more expensive than the cheaper ones that I'm pretty sure that we're probably using at the moment. But all in all, even if you can't find ways to tackle the pests when it comes to the right pesticides to use, storage is an issue. A situation where we had a huge harvest, it will make sense that you have good storage facilities to store the tomatoes at optimum quality, to make sure that at this point where we're seeing supply shortfalls, we're able to feed the demand going forward.
All right, let's look at sugar futures now. It's down about 0.64%. We're seeing more supply
in Brazil
coming from Brazil.
Yes.
So is this good for us?
Yes, it's definitely good for us, because we're also major. As much as we have the Dangotes that produce, it's still not enough for our economy, and we definitely import a certain amount of sugar, and so we're on the receiving side of things, so it's great for our trade balance. When it comes to obviously cocoa as well, we had mentioned that although the prices in Ogun, Osun, and Cross River is a bit high at the moment, but it's not as high as what the global prices are trading at. I think it ranges at about $2,500 per metric ton, but in Ondo we're seeing lower prices at about $2,400. But all in all, when it comes to the sale of cocoa, export revenue should reach about $731 million. Unlike we have it on our slides as well, the fact that in Tanzania, cashew is one of their major commodities, and they're earning at about $760 million there as well, and obviously that's great for them. And the fact that Nigeria is much bigger than Tanzania, for example, imagine how great it is that the export revenue is currently at about less than what we're earning in cocoa at the moment.
Quite interesting. Let's look at the other global exports now. We see Tanzania's cashew nut export revenue.
Yes.
That's up by about 5.6%.
Yes. Yeah, so
quite good for them.
Yeah, it's quite good for them, and it just shows the potential. Right now, especially the western part of the world, they're looking for new sources of major commodities, and it's just be nice to take advantage of it. We've had situations where Kenya has taken advantage, Botswana, Angola, and Tanzania as well. So Nigeria has opportunities right in front of them.
Because we have cashews.
Yes, definitely. We have cashew.
Amount.
But I think right now, the investment required to boost our cashew production to that level is what we're lacking, and in many other commodities as well. And another point to mention, LNG is a good one at the moment.
Right.
It seems like the NNPC mentioned that we had secured funding for the Lagos-Morocco or Nigeria-Morocco pipeline. Currently, I think they're trying to release funding for the survey up until Senegal. So that's great for us because it means that we can boost our export revenue with that. And I know, obviously, most people would mention the fact that you're trying to boost export revenue outside of Nigeria, but within the country, we're not able to meet the domestic demand. But if they think about it this way, whereby once you increase the export revenue by supplying, other African nations, you can use the profits from that to improve our own gas pipeline within the country and obviously increase our production in the near term.
All right, what are you seeing for domestic commodity prices next week?
Well, next week, prices will definitely still remain high. It's too short. There's nothing significant that is changing prices at the moment. We've not really gotten into the harvest season yet. And we do hope that, although the tuta absoluta, it doesn't last for long, once the farmers are able to plant and replenish, that lost supply, we'll definitely see prices come down, hopefully. And I guess when most manufacturers and farmers as well, when they price into their cost, or they've added the price of the fact that they've removed subsidy, the transportation cost, all of that, we'll definitely see, and they look for innovative ways to absorb those costs. We'll definitely see prices go down in the
Right, because I remember when I was younger, I used to grow tomatoes in my backyard, and I didn't have that issue, and they did come out right, but I'm sure it's because it was just
the volume,
my consumption.
I guess, yes,
exactly. That's why they
when
didn't
you look
attack
at
me.
the volumes,
right.
it will definitely, be
All
different.
right, thank you so much, Bolanle Agbaje, Senior Analyst, Financial Derivatives Company.
Thank you for having me.
All right, now let's head on to our other conversation. Now, so the Nigerian government, through the Federal Inland Revenue Service, announced the VAT Direct Initiative, a scheme that would enable the federal government to collect value-added taxes from the informal sector and reduce multiple taxations in the informal economy. For details on how this will work, joining me now is Dr. Lovette Ononuga, Director of Value-Added Tax Department, Federal Inland Revenue Service. Join us from our Abuja studio. Great to have you on the show. Good morning.
Good morning.
So this is...
Good morning, Daddy.
Thank you for coming on. This is definitely good news, getting the informal sector into the tax net. Can you break it down for us? Is this going to be a process the average trader will understand and be able to work with? I don't know if you can hear me. So I said that, the whole process...
Yes.
You can hear me now? Mm-hmm. Okay, fantastic.
Yes,
so I'm talking about
now.
the,
yes.
process of, collecting VAT, from the informal sector. I want to know, if the average trader there, the average, market seller will not have issues, understanding, this process.
Thank you very much, Ladi. Thank you for having me on the show this morning, and thank you for that question. It's very important. This whole VAT Direct initiative is actually for the benefit of the traders. The FRS is partnering with the Market Traders Association, which is the umbrella body for all traders in Nigeria. And in doing this, we are not doing it outside of the VAT Act. The VAT Act already stipulates who should pay VAT and what is VATable and what is not. So the average trader whose turnover is below 25 million is not affected by this initiative, does not have to now begin to pay VAT. Neither do those who trade in VAT-exempt goods expected to pay VAT under this initiative. The initiative is just simply trying to expand the tax net to those who are not formally registered, businesses that are not formally registered, and have not been paying VAT according to the VAT Act. So now with this initiative, we will bring them in to the tax net and expand the tax net so that we can harness the VAT from the informal sector. Informal sector, we are targeting at those with huge turnovers who should be charging and paying VAT but have not been doing so. People that sell things like electronics, textiles, gold, and all those and all that. Not people selling tomatoes or pepper in the marketplace. We are not targeting the ordinary trader that is selling food stuff. You know, so it has absolutely no impact at all on the average trader that is dealing in basic food items.
Talking about the average, trader, are you still going to be collecting data from that segment?
Sorry, could you say that again, please?
Yeah, talking about the average traders now, you said they are not the target, at this point. But are you still going to add them, into the tax tax basket?
Yes, because like I said, the intent is to expand the tax net. So the VAT Direct initiative will enumerate traders. That data is very important for planning, both at the local, state, and federal levels. At the moment, we don't even have data on who the business community. The World Bank says that 80% of the Nigerian business economy is informal. Only 20% is formal, and we don't have that data. We don't know who makes up that 80%. The VAT Direct initiative will lay the foundation for, for building up that data bank so that we know exactly who are the informal traders. We know what bracket they fall under and what they're dealing in. So that amount of information is going to be invaluable to Nigeria's economy or to the planning at both local, state, and federal levels. So that's one of the key purposes of this VAT Direct initiative. So we need to enumerate everyone. And there are benefits to keying in, for the traders for keying in into this initiative. One, they are now known to government. Two, they can access government palliatives and incentives. They can also, they can also receive support from the Market Traders Association, that is their umbrella body, and have access to certain, services that will make trading in the market much easier and just improve the ease of doing business generally.
And most of these traders, they already pay, some illegal taxes to, some non-state actors at this point. What's the plan, to handle, this kind of situation? We've seen, self-imposed tax collectors that collect illegal taxes, from the market traders. What's the plan to, eliminate, that segment so that they don't have to pay multiple taxes, talking about the traders in the markets?
Yes, so part of the objectives of the VDI, the VAT Direct initiative, is to reduce multiple taxation in the market. FRS partnering with the mother or the umbrella body of market traders and the law enforcement agencies. As we are aware, the FRS Establishment Act already empowers the FRS to co-opt law enforcement agencies in the collection of taxes. Now, what happens is that there is an approved list of taxes and levies that the local government, the state, and the federal should collect. Now, the VAT is a federal tax to be collected from, according to Section 8 of the VAT Act, from all persons, whether individuals, incorporated or not, registered or not, carrying on business in vatable goods and services in the country. Therefore, FRS has the jurisdiction to collect the VAT from everyone who is trading, whether you are an individual or a corporate entity registered or not, so long as you are dealing in vatable goods and services. So with this now, with this initiative, the FRS chairman, who is also the chairman of JTB, the Joint Tax Board, we're going to work in collaboration with the JTB and the MATAN, which is the umbrella, the Association of the Traders, to form enforcement teams that will ensure sanity in the marketplace. We get rid of illegal touts that are, posing as tax collectors, and those taxes are not really coming into the coffers of the government. So it will only be the approved list of taxes that will now be collected, and with these enforcement teams that will form part of this VAT Direct initiative. So
and what about those?
Hopefully that would
what about
make things life better in the markets. Yes.
What about
the illegal taxation is really affecting them? Yeah.
Okay. Talking about the illegal tax collectors, what if they put up some kind of resistance and regardless they still go after the traders to collect these taxes forcefully? What happens?
So that's why the law enforcement agencies are a key part of this scheme. They're going to work with the agents to form, like I said, the enforcement teams that will patrol the markets and keep the markets safe and keep the markets secure. Now, in conceptualizing this scheme, we looked at what are the issues. Why is it that it's been impossible to actually bring in the informal sector into the tax net? Because they have a different set of rules or problems that government has not been able before now to really, address, So they are at the mercy of these illegal tax collectors who harass them and sometimes shut down their businesses or destroy their goods. So we have to listen to what the problems, what are their pain points in coming up with this initiative, and how the FRS, as an arm of government, can actually, address those things in return for bringing them into the tax net, so that we create a better marketplace, and of course, in the process, more money for all the 3 tiers of government.
And hopefully the 3 tiers of government also provide a lot for the citizens too. But tell us about the identity card that will be given to MATAN members. What can we expect from that?
Okay, so the identity card is will be given on enumeration, and that's the digital identity. It gives the traders a digital identity that allows them to become visible and now eligible for the whatever incentives and palliatives that come with this initiative. So it is just an identity card. It has their personal details and 18 identification number on it. That's what the ID card is.
And how much data are you expecting here? How much data do you think you're going to be handling? We have a lot of traders, in Nigeria. What are you expecting?
Well, according to MATAN's records, there's over 40 million members. They have over 40 million members across 774 local government areas of Nigeria. So that's around about the region of data. But like I said, not each and every one of them would be expected to charge VAT on what they're selling. There is a 25 million threshold, which is already built into the VAT Act, which will be taken care of. That means that the very small micro businesses will not be affected. Then there is those who are dealing in non-exempt goods, VAT-exempt goods and services, like basic food items, which I mentioned, pepper, tomato, garri, yam sellers. All these people are not going to be affected. Those dealing in medical services, educational materials or sector, the exempt list is out there in the public space for anyone to access. So all those categories, we are not going to be doing anything outside of what the VAT Act says as it is now. We're only focusing on those who are eligible to actually charge the VAT on their goods and services they deal, who before now have not been in the tax net. But with this initiative now, we will bring them in.
All right, definitely we'll keep tracking progress with that. Thank you so much for coming, Dr. Lovette Ononuga, Director, Value Added Tax Department, FIRS. Thank you for coming on the show today.
Thank you very much for having me. Thank you, Ladi.
All right. All right, so now let's head on to the markets now. Definitely Will has all the details. And yeah, speaking about,
Hi,
VAT,
yes.
all those profits.
Yeah, you do know that investors do pay,
exactly.
tax. So the government is
bullish first half.
Yes, and you know that how much tax they paid on that.
Right.
Just thinking about the trades that being executed on the exchange is enough for a lot more money. It's a huge revenue for the government, the 3 years of government, if they, if that is distributed amongst them. The SEC does take what they need to do to take, and then they remit it to the government. So let's see how the government makes good use of this.
Bullish run in
the bullish run and the taxes that we're paying. So we're just seeing the bullish sentiments. The markets rebounded in yesterday's trading session. We saw bullish sentiment. Boa Cement, which pulled back the markets in the previous session, actually drove the benchmark index higher by 1.33% back to the 61,000 level. We're still on the 33 trillion naira mark, and we're seeing month-to-date and year-to-date returns increasing to 1.9 and 20%. Year-to-date is at 20%. Wow, that's fantastic. Now, the total volume traded declined, however, by 23.6% to 846.32 million units, valued at 10.31 billion naira, all transacted in 9,815 deals. Now, looking at the sectors, we're seeing more of a very mostly positive sentiment for the sectors, except for the insurance segment, which we know AXA said was down yesterday, and several other penny stocks in that category. Now, we saw banking sector up. Strong bullish sentiment for banking stocks yesterday. Consumer goods was up, industrial, as well as the oil and gas. Oil and gas has been doing fantastic for the past few weeks. This is the time, toast of investors. A lot of the eyes are on the oil and gas sector right now, so a lot of deals going down there. So it's much expected to see that segment doing very well. Now, FBN Holdings was the most traded stock by volume yesterday. If we look at the top trades yesterday, we see FBN Holdings having the largest volume, highest volume yesterday, 89.24 million units of its shares traded yesterday, followed close by Access Holdings, still within the same range, slightly lower by just about a million or so. And then we have Access Core. We had Transcore and Access Holdings, rather, 85.91 million units traded yesterday. We still had very positive market breadth. We saw 43 gainers in the market yesterday compared to 30 losers. So we still expect the market to still perform at its best today in its market. Let's bring in Oyin Koshola Aregbeshola. She's investment research analyst with ARM Securities Limited. She's going to give us more insights as to what's happening in the market, and she's going to give us a breakdown of what the NGX, they brought out the review of indices on the exchange, which kicked off on Monday, July the 3rd. We're going to know what criteria were used there. Good morning, Oyin Koshola. It's good to have you on the program.
Good morning, Will. Thank you for having me.
Okay, so you were just talking about the reshuffling and the review of the indexes on the exchange. I want to know what criteria was it, what factors were considered for this reshuffling, because we did see that Union Bank exited the banking index. We saw Geregu moving up to the NGX 30. We saw NACO going on to the NGX Lotus Islamic Index. We saw other things. Could you just explain to us, and did this meet expectations?
All right, thank you for your question. So for the NGX 30, just like you mentioned, we saw Geregu go into that, and as well as Sterling Bank. And looking at the performance from Geregu for throughout this year, we've actually seen the share price, rally, even from the beginning of the year. And we've seen, of course, the announcement earlier in the year that a subsidiary of Afrexim Bank, which is the Fund for Export Development in Africa, FEDA, announced that it was going to acquire like about 5% stake in Gergu, and we saw, markets, react positively to that news. And then recently we received the new administration signed the Electricity Act 2023, and we've seen the purpose of the act, which is actually to drive or to empower, private sector, contribution in that sector, basically to empower states, companies, and individuals to engage in electricity generation, transmission, and distribution. So it's more like the sector. It's more like an act for the private sector. So that's actually positive, for the guys in the power sector, and that's definitely for Gergu. So we've seen the share price rally, gain year-to-date gains is actually at about 1% as of yesterday. So that actually pushed the market cap up to about 750 billion, because we've actually not seen any new share issue. So this is largely due to the to the price changes over the past 6 months. We could say the same for Sterling Bank. Seeing the share price rally to about 178% on a year-to-date basis. As of yesterday, it closed at 3.89, and we've seen positive sentiment around the banking industry, or banking sector rather, following the policy reforms by the new administration. For example, the FX unification announcement is actually a good one for the banking tickers. And just like you mentioned, the banking sector closed positive yesterday. And if we look at the year-to-date performance, it has gone up to about 55% for the banking index, right, up as at 30th of June rather. So we've seen this positive sentiment around sectors like the oil and gas, sectors like banking tickers. So that's actually influenced the performance of Sterling Bank, and has also moved the market capitalization up. So this is actually the consideration. So more like the changes in the market cap, has actually driven, Gergu up and Sterling Bank, and and that informed the recapitalization, that was earlier announced this week.
That's so much insights there. What expectations do we have for the half-year earnings report? We know we're expecting some early filers by the end of July. What are we expecting for the half-year results?
All right, so basically, I'll start with the oil and gas sector. I mean, looking at the deregulation of that sector, we should actually expect, although we might not see it, we might not see the full effect at the moment, but we can actually at least see some changes in that sector. We actually expect positive earnings, from the players in the oil and gas sector, and as well as the banking sector. I mean, the interest rate is still at elevated levels, so the interest income, we expect increase in interest income. We already see like that body language in the Q1 results, and we see most of the banks, record like an offshoot in their interest income. So we expect interest income to to maintain its upward trajectory, and so that will result in a positive earnings declaration from the banking sector, and we expect the telecommunication sector to also remain resilient. Thank you.
Okay, thank you so much, Oyinkan-Shola Aregbesola, investment research analyst, ARM Securities, for those insights. We look forward to the earnings report, and we do hope it spurs investors to keep, investing in the market. Thank you so much for your insights.
Thank you for having me.
So we did see the market closing very, very bullish yesterday, right, Ladi, and we're expecting the same positive sentiments to persist in the market today. So get your coins ready, get your money ready.
Get your coins ready.
Yes, and get your money ready, because the market is going to surprise you.
Right.
I'm giving you a prediction now.
Right.
Bullish close.
Bullish close.
Whether it's negative or not, I don't want to know, but it's going to be bullish close.
Bullish. Bullish positive.
Bullish positive.
All right. Thank you so much, Will. Well, let's take a look at what other markets are saying now. We see the sentiment in the market still Still should be greed at this point. Talking about the sentiment, greed 56 points of 100. That's what we're still seeing. So still a very greedy market right now. Let's look at the top cryptocurrencies we track. We see Bitcoin there, $30,600. Lost that 31,000 level after breaking that level. 0.70% marginal pullback is what we're seeing right now. Ethereum, $1,900. Still holding on, strong to that level. BNB there, $240. That's down 1.10%, big drop. And we see Cardano also losing that 30-cent level, 3.38% drop. That's what we're seeing. And XRP not getting above that 50-cent level again, 2.22% down. That's what we're seeing in the market. Let's bring in Gilbert Jokpata now, financial market analyst. Great to have you, Gilbert. Good morning.
Yeah, good morning, Mr. Ladi.
So what's driving sentiment in the market right now? We know the U.S. Fed minutes for the last meeting is out, and investors are reading a hawkish stance, and the U.S. dollar is reacting to that already. What are you seeing?
So yesterday's minute by the Federal Open Market Committee actually revealed in clear details that though they skipped increasing interest rate in June, they are likely not going to do so in July, as long as inflation is still well above the 2%. And they are still projecting a federal fund rate to hit about 5.6% before the end of the year. And this is why we could see the dollar reacting the way it is. And this actually implies that the Fed could implement 2 or more quarter point boosts before the 4 remaining meetings slated this year. And this is likely going to happen this month, which is July and also September. But for this month, we currently stand an over 88% chance of seeing a quarter point boost, which will happen in the next 21 days. But overall, the FOMC meetings is not particularly a big deal in crypto anymore, since investors know what the Feds are thinking regarding the management of the economy. And I think the market has priced it in. This is why we did not see the kind of volatility we had always seen whenever FOMC minutes is always released. However, I still think investors should still be aware that the Fed is still likely going to continue increasing interest rates, even though not aggressive, but more slow pace this time.
Yeah, still expecting more interest rate hikes going forward. So, Gilbert, what are you expecting for the coming weekend? Are we going to see, irregular pumps for most of these altcoins, or are we going to see a drop this weekend? What are you seeing?
Okay, I personally have my eyes on Bitcoin. Bitcoin has to break 32K and turn it into a support. If this doesn't happen, we are going to remain range bound. So my eyes remain on Bitcoin. Meanwhile, Bitcoin dominance is really having it's still in the show, and also letting alts have a bloodbath. But until then, my eyes still remain on Bitcoin dominance and Bitcoin breaking the 32K range. If it does, then we will have more of an upward movement above that range. Otherwise, we'll still have a range forward movement for the week.
All right, all eyes on Bitcoin and Bitcoin dominance going forward in the market cap. Thank you so much, Gilbert Jokpata. It's always great having your perspective. Thank you.
Yeah, thanks for having me.
All right, now let's look at the top gainers now. We see Bitcoin Cash, $293. Bitcoin Cash has had an incredible first half of 2023. It's up about 250% now, plus adding 7.34% this morning. And we see eCash also getting back after having a pullback, 4.24%. And we see privacy coin there, Monero, that's up 1.21%. Flip over to the top losers this morning. We see who's topping the top losers counting out. Most of the coins there have seen single-digit losses. That's what we're seeing for the top losers counter. But it's still a greedy market right here, and looking forward to what happens this weekend. That's the market today, and that's a wrap on the program. Thanks so much for watching. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, click on our videos. You can watch all our productions. Thanks for watching. I'm Ladi Williams. Bye-bye.